Hey guys, welcome back to another video. Today I want to talk about where we are right now with Bitcoin, and frankly I want to go through both the bullish case and the bearish case because right now we're at a really critical juncture in the cycle. I'm actually out of town right now, so I apologize for the bad microphone, and of course the second I leave, Bitcoin decides to do something, so I thought I'd provide a quick update here. So Bitcoin topped on October 6th at around 126K. And as of November 17th, we're currently sitting around $92,000. That's about a 26% correction from the top. And as you know, a lot of people are panicking right now. They're scared. They're wondering if the top is in, if we're going into a bear market. And I want to address both sides of that argument from my perspectives. So before we get into the charts and the data, I want to be very clear about my own opinion, my own view. If Bitcoin wants to make new all-time highs from here, it needs to happen extremely soon. We're talking by December, because the longer we stay below key on-chain levels, key certain levels, the more momentum starts to shift to the downside, right? And historically, mid-cycle years like 2018, 2022, and potentially 2026 have been bear market years for Bitcoin. And even if we do go into a bear market in 2026, which I personally think is the most likely outcome for Bitcoin, and I've been saying that since I launched my channel, even if we see another 50 to 60% drawdown from wherever the top ends up being, I'm still personally long-term bullish on Bitcoin, and I want to talk about why that is later in the video. So let's talk about the sort of important line in the sand, the market value to realized value mean here, and that's in gray here. That's currently sitting around $102,700, and we got our first weekly close below that level. And now in prior cycles, when we have gotten weekly closes below this level, some people look at the 50-week moving average. I like to look at the MVRV mean. When we've gotten these weekly closes below this level, it's historically marked the beginning of bear markets, right? And the reason this metric works is because we're looking at basically the aggregate cost basis of the entire market on chain. So when price falls below this level, that's where the average Bitcoin holder acquired their coins. That's where psychology really starts to shift. So holders who were in profit start moving into unrealized losses. And that's when capitulation behavior tends to start to accelerate, right? Not always immediately, but it's been a pretty reliable signal. We typically then see a drop to the next major on-chain support level, which is the active realized price. This is basically looking at only actively moved coins, so traders or investors that are more so participating in the market on a day-to-day basis. So what I'm watching for now is whether we get if we get 2 or 3 more weekly closes below the MVRV mean, and then if we try to sort of rally back up to it, and if it holds as resistance or as support, if we can break through it or not. So if that plays out, if we can't reclaim the MVRV mean by December, then in my opinion, that would strongly suggest that the cycle top is already in, and 2026 becomes a bear market year by default. So, but we're not there yet. We've only had one weekly close below it. Bitcoin could rally back above it this week or next week, reclaim it. It's happened before, such as in summer of 2021. We've gotten, we got like 2 weekly closes below this level, and we sort of failed to break back above it. And then we tested the active realized price at around $30,000, and then sort of bounced above that level and reclaimed the short-term holder cost basis, and then held support at the MVRV mean here. So the active realized price is currently sitting around $89,000, $88,000. So there is a world that exists where we could wick below to this level, reclaim the MVRV mean, reclaim the short-term holder cost basis, and then potentially go back up. So I don't want to be overly deterministic here. So let's talk about the bull case first. So what would happen? What would need to happen for Bitcoin to make new all-time highs? And so speed is absolutely critical here. That's my main thing that I would look for. So Bitcoin would need to reclaim this level pretty quickly, ideally this week or next week, and then push through it with momentum into December. Historically, Q4 has been when Bitcoin tends to top in post-halving years. 2013, 2017, 2021 were all Q4 tops. So if we're going to get one more leg up, it would fit the historical pattern for it to happen in late November, late December. It could also be that October fits the bill too, right? So especially if you look at metrics like the ROI from bottom to peak. So the bull case would also point towards the fact that we haven't yet seen euphoria on some metrics, and that's a pretty important point. Every prior cycle has every prior cycle top has been characterized by extreme euphoria, right? Retail going absolutely crazy, everyone and their grandmother buying Bitcoin, social media going nuts. We haven't really seen that this cycle. In contrast, we've mainly seen institutional investment driven by the rise of ETFs. So the bull case would say we haven't topped because we haven't had euphoria. They could also look at another metric, which is the percentage of Bitcoin of circulating supply of Bitcoin in profit or loss. And the current supply of percentage of Bitcoin in loss is currently sitting around 33%, right? So that's out of all the Bitcoin in the world, 33% are in loss. And this is higher percentage loss than what we saw in the previous two consolidation events this cycle, but still not higher than what we saw in the previous 2021 summer. We hit around 20 or around 38, I think it was. Yeah, we hit around 30, 35. So we're currently seeing around 33. In 2013, we hit at around 38 and still had another leg up, right? So if this goes above 40%, that's something that's somewhere that's already where Bitcoin is already well within the bear market. So currently we're sitting around 33%. This could go back down if Bitcoin gets another rally up to 102, 103K. And if Bitcoin can't break above 103, 102K, then you would likely start to see this sort of continued go up as we reach 2026. So the other thing that bulls would sort of point to is that we have another, new players this cycle. We have the ETFs. We have institutional adoption at a level that we've never seen before. MicroStrategy alone holds over 640,000 Bitcoin with an average cost basis of around $74,000. And these institutions specifically are arguably conviction holders, not necessarily the ETFs, by the way. And if Bitcoin were to drop significantly below these institutional cost basis, like 74K, that's MicroStrategy's cost basis, you might argue that these institutions would sort of step in and buy more aggressively if they truly believe in Bitcoin, like most people watching this video probably do over the long run. So that's the bull case. Reclaim the MVRV mean at 102, 103K, push into Q4, potentially get that euphoria phase that we've been waiting for. So now let's talk about the bear case, right? And honestly, this is where sort of the weight of history really starts to sort of stack up. And so first, there's the timing aspect, right? Every Bitcoin bear market, every mid-cycle year has historically been a bear market year. So 2018, 2022, 2014, why would 2026 be any different, right? And every cycle top has historically occurred in Q4 of the post-halving year. And we're in Q4 of the post-halving year now. We just put in what could be a cycle top at 126K in October. So the pattern is there compared to what we've seen in the past. So secondly, we've started to see long-term holders distribute throughout this entire cycle. These are, the holders that have bought during the bear market, held through the entire recovery, and start to take profits, right? This is normal behavior compared to what we've seen at prior cycle tops. And so it's what they're supposed to do, but it also means that there's been significant selling pressure coming from these stronger hands in the market, right? So lastly, obviously, we talked about this. We broke below the MVRV mean in prior cycles. When you start to get weekly closes below this level this late in the cycle, it's been a pretty reliable signal that momentum has shifted. If you look at 2021, when we broke below it for the last time, and 2017 and 2013, once you start getting those weekly closes below key support levels late in the cycle, it's very difficult to start to recover and make new highs. So So the bear case says that the top is likely either in or will be in by perhaps December at the latest, and we go into 2026, which historically is a mid-cycle bear market year. So, we start to get a 12 to 13 month drawdown from the top, just like we've seen in prior cycles. So, based on historical patterns and diminishing returns, we might see something within the range of, say, 60 to 70% drawdown or correction, which would put Bitcoin somewhere in the range of 40 to 55K at the bottom. It doesn't necessarily have to play out exactly like that, but I would still say 2026 would be a good time to accumulate though. So let's look at some of the on-chain data and see what it's actually sort of telling us right now. And I want to focus on a few key metrics that I think really paint a picture of where we are right now. So first, this is the on-chain risk composite metric. This is a single 0 to 1 reading that basically takes 10 different on-chain metrics, combining them into a single indicator. So instead of looking at 10 different charts and trying to interpret them all separately, this does like the heavy lifting for you, right? So the way it works is when we're in these bottom blue regions, that's very low risk. That's extreme fear, capitulation. That's where generational opportunities have occurred historically. When we start moving into these light blue to greenish level, that's lower risk, sort of bear market condition and accumulation zones. The green areas is 40 to 60 region. That's sort of neutral, fair value, sort of balanced conditions. And when we start to get up to these orangish yellow regions, that's 60 to 80, that's sort of higher risk. That's when the bull market starts to sort of heat up. Caution should be advised. And then 80 to 100, that's very high risk, euphoric zones, extreme greed territories. So right now we're sitting at around 0.579 on this metric. So we're approaching that sort of neutral territory. The chart also has these sort of historical standard deviation bands. That's basically showing the standard deviation of this actual data set and putting it into a +1 average or a -1 standard deviation. And so when the risk crosses below into this green into the -1 standard deviation, that's typically been a historically good buy signal. And so we're currently right above that right now. We're kind of in the middle between the +1 and the average right now. So if we were to go into that 2026 bear market scenario, I would expect this metric to drop into that 0 to 20 level to those blue zones, right? So the second metric I want to look at is the long-term holder profit to volatility ratio. You can sort of think of this as how much long-term holder selling results in profit being taken with respect to what they've taken in the past. So long-term holders have been distributing and sitting on substantial gains this cycle. These are people who bought during bear market lows and who have been holding all the way up here as we're at these all-time highs, and they're finally starting to take profit. So we have seen this metric increase substantially during this entire run-up to 226K, meaning that the cumulative profit that they've taken have been immense, really just causing buying pressure to start to subside here at these higher levels, just like we've seen in prior all-time highs and in prior cycle tops previously, such as 2021 in November, in 2017 and 2013 and in 2011, right? So another important pattern that I like to look at is the historical drawdowns, like I mentioned. So in 2013 to 2015, we saw that the top was in at December 2013 at around $1,200 or so. The bottom was in January 2015 at around $150. That was about 13 months from top to bottom with around an 84% drawdown. So I'm talking about the 2015-2013 cycle. That was around 363 days, so 12 months. And in 2017 to 2018 cycle, the top was in December 2017 and around $20,000. The bottom was in December 2018 at around $3,300, right? So that was also 12 months from top to bottom with an 83% drawdown. So in 2021, 2018, 2021, that was, or sorry, do I have it in here? Yeah, in 2018 to 2021, that was, top was in at 69K. The bottom was in at November 2022 at around 15K. That was around 13 months from top to bottom with a 76% drawdown or so. So nearly 12 to 13 months from top to bottom, right? So we have seen that the drawdowns are diminishing over time. So you saw in 2011 it was negative 93%. In 2017 it was negative 83%. In 2022, sorry, 84% first, and then 83%. And then in 2021 it was a 76% drawdown. So if this cycle were to top in Q4 2025, the pattern would suggest that we'd see a bottom somewhere in Q4 2026 or Q1 2027. And if drawdowns were to sort of continue to diminish like we've seen in prior cycles, maybe we sort of see somewhere in the range of 60 to 65% instead of negative 70, negative 80%. So if the top was in at 126K, for example, and we drop 60%, that puts us at around 45 to 55K range. And that's also pretty interesting because if we look at the realized price, that's sort of sitting at around $60,000 or so, $56,000. That's where sort of these key on-chain metrics and support levels will be by that time. So those have historically marked pretty good accumulation zones that we've seen in 2022 and 2017, 2018. And another important thing to talk about, in my opinion, is we have these sort of institutional involvements now. So MicroStrategy, public companies holding Bitcoin on their balance sheets. We don't necessarily know exactly how these players will behave in bear markets. So another thing I want to talk about is MicroStrategy's average cost basis is around $74,000. So if Bitcoin were to drop below that in a severe bear market, that would be a pretty important test. And I'm just imagining like the headlines of MicroStrategy underwater on Bitcoin holdings. The FUD would be pretty intense. So I want to come back to something pretty important here. So just because you're in the either in the bull camp or in the bear camp for what happens over the next few months, I think we all sort of need to keep the long-term perspective in mind here. So the best and most simple way of getting rich is to do nothing. Buy Bitcoin and forget about it, or buy assets you like and forget about them. Go live your life and know that your well-being is in the most secure and growing network in the world. Yes, long-term holders have been distributing. Yes, there's been significant selling from people who bought during bear markets and have been taking profits. That's completely normal and rational behavior. And even with all that distribution, even with this 26% pullback, even if we do go into the bear market year in 2026, Bitcoin is still Bitcoin, right? The network is still secure. The fundamentals are still strong. The adoption is still growing. And bear markets are where most of the money is made, right? Like in 2022 at $20,000 to $15,000 is where I was buying a majority of my own Bitcoin, right? So at the end of the day, bears sound smart, but bulls are the ones who make money at the end of the day. That's been true for Bitcoin's entire history. And yes, there are times when the bears are right. 2014, 2018, 2022, those were all bear markets. But over the long haul, if you've held Bitcoin for 4+ years, you've made money. Period. Right. So even if we look at the 2026 potential bear market, even if we see another 60 to 70% drawdown, that's not a reason to necessarily panic, because if history is any indication, right, Bitcoin will recover from that bottom and go on to make new all-time highs in the next cycle. The people who make real wealth in Bitcoin aren't the ones trying to time every single top and bottom. They're the ones who buy and hold through the volatility and give it time to work out, right? So 5-10 years time frame, that's where the real gains are made, in my opinion. So to sum it up, I think both sides, the bear and the bull case, both have legitimate arguments right now. The bulls can point to sort of the lack of euphoria and say we're not done yet. The bears can point towards, the historical timing patterns, the break below the 50-week moving average or the MVRV mean, or the amount of long-term holders that have been taking profits. I personally think that the probability is going up that the top is in or will be in by the end of December, and that 2026 ends up being a bear market year. But if Bitcoin reclaims this sort of level 102, 103K and pushes into Q4, I'll start to reassess that. But the market doesn't care about my opinion. It's going to do what it's going to do, and most importantly, regardless of what happens in the next 6 to 12 months, I'm long-term bullish because I think Bitcoin is, over a long enough time horizon, is one of the best asymmetric bets you can take. It's going to outperform pretty much everything over the next 10 to 20 years, in my opinion. So if you're buying here, if you're waiting for lower prices, or if you're taking profits here, just make sure you're thinking long term, right? Don't get so caught up in these short term moves that make you lose sight of the bigger picture. And these are just my thoughts based on the data and the patterns that I've studied. I could be, completely wrong. No one knows exactly what's going to happen, but hopefully this gives you a sort of framework for thinking about where we are and where we might be going. So all these charts are available for free at chartinspect.com. If you found this helpful, give the video a thumbs up, subscribe, and check out the Telegram link in the description below. Thank you guys for watching, and I'll see you guys in the next one.